Rahul Chaddha, you may want to pay attention to this. I know you're online. 2014 on the exit poll, market reacted by 2.5%. On verdict day, it was a 1% reaction. Similarly, 2019, a great thumbs up to the exit poll, but markets were actually down on the verdict day. Yesterday, a super reaction to the exit poll, more than 3%. But if, like they say, history may repeat itself, are we in for a good reaction to exit poll, but a dull reaction to the verdict? Could it be a day of buy the rumor and sell the news in the short term?
So again, Nikunj, to what you said, I mean, it can happen that look, today is lackluster, but from a FI perspective, what the large institutional investors would do here is see the actual mandate, see the policies, look at the budget. Look, there are talks of some of the capital gains tax being revised in the budget. So see the policy making. Look, I think from a medium term perspective, one is very positive, and this kind of a verdict hopefully should reaffirm the big India overweight we've had over the years, and that also kind of builds momentum for next 5, 10 years of growth.
In the short term, medium term, and long term, if you're an India investor, if you're India bull, what changes in the short term, medium term, and the long term?
I think short term still, again, after the elections, is going to be a reality check. Look, is there something happening on the taxation front? What is the recovery in the economy? We've seen the consumption space, which has been under pressure for last 6, 9 months. There was some kind of a green shoots around March, April, particularly for the rural economy. So you want to get some clarity on that. So it is going to be kind of getting some bit of insights from the government that what are the plans from the third term. Look, if we see what happened over 10 years when the government came in 2014, there were its own set of issues. A lot of these projects were stuck, all these things. So one had to rectify that. The second term was marked by COVID and the GST implementation. So hopes are running high for the third term that look, is government able to take some of the tough decisions towards privatizing the PSUs, doing some of these labor reforms, etc., which kind of keeps the economy on this strong growth momentum.
Absolutely. Rahul, hi, morning. So where is it that you're going to be buying? And are you buying afresh just yet at these elevated levels after we hit those record highs yesterday?
I think financials are still attractive. See, financials got impacted last year because look, EM funds had redemptions, and that's where the financials got impacted. But the way we look at this year and next year is as kind of an we see some bit of an easing from Fed as US slows down and rest of the EMs kind of stabilize to improve in growth. We're going to see flows shift into EM. So again, India is a good story in EM, but outside that, we have this value program in Korea also playing out. Taiwan benefits from these AI spends, and the Chinese economy is stabilizing slowly. So our hope is that look, EMs get allocations in the coming quarters, and that's where India would also benefit.
Modi, you have a question, Avan?
No, go for it.
No, please, please.
No, I was just wanting to get in your take, Rahul, as to what the outlook is when it comes to, the fact that the capex-related stocks. It seems like there is going to be that sentimental positive, and that's what we've been talking about day after day with respect to this sector. Is that really what's in store now?
Yeah. So I think those are names we've liked and owned for last couple of years, but like the way you rightly said, the valuations are slightly on the higher side for these names. So one has to be comfortable with the growth story. And I think this clear verdict which comes through reaffirms that the growth story continues for next 5, 7 years. What we've seen with these names, and this is a reiteration of what one saw between the 2003 to 2007 cycle, if you remember, you had the ABBs, you had the Siemens, etc. And when you had strong revenue growth, one got a very positive signs on that operating leverage, and the profits were surprising. So I think that is what the hope is this time around, as the capex spends are significantly up, and we get to see the private sector capex pick up. So as the private sector capex kind of picks up, these names should do well. And I think the bigger change which is going to happen is last couple of years, one didn't see any significant uptick in the FDI. But as one gets clarity on this verdict, a lot of long-term money, which is the FDI money, should kind of come to India.
We have, well, the initial leads, and their leads right now have started coming in. And in line with what the exit poll is indicating. Let's see if we can give you, this is a total tally, 90, 30 for the India block and others are 10. Immediate reaction, counting started at 8 o'clock. GIFT Nifty's immediate reaction is, we like the initial trends. 40 points higher, 60 points higher. It could be 70.
161 points higher, Nikunj.
No,
the
from
Nifty implied open is 0.6%.
Yeah, from
higher.
8 to 810.
Yeah,
50, 60 points.
Sure, yeah.
Rahul Chaddha, give a tip for SIP holders.
No, I think because it's as I said, it's hard for the day traders. But what I'm saying is, look, what one has to realize is the volatility of the market has reduced because we have a policy predictability, because we have a strong macroeconomic policy in an environment where you see most country running high trade, high fiscal deficits. I think India stands out. At every dip, the market is going to be bought. And from that perspective, it's a big positive. Look, in the past, I remember for bulk of my 25-year investing career, we used to bake in 3-4% rupee depreciation. Now nobody talks about that. I mean, who knows? You may see rupee appreciating also. So I think those are meaningful changes which have quietly happened over last 4 or 5 years. And we'll reap the fruits of that in terms of getting this higher for longer or much, much superior growth rates for a longer period of time.
Rahul Chaddha, appreciate your time. Thank you for joining us.